we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. The British Parliament gives Theresa May the mandate to head back to Brussels to renegotiate the Brexit terms. The Ahmedabad NCLT rejects the Ruia family's bid to reclaim Essar Steel, rules only the creditors can seek to withdraw the application. The two founding families of Yes Bank bury the hatchet after 10 years, will appoint one director each to the board of the bank. And there are four nifty companies, including Indian Oil Corporation and ICICI Bank, which will be coming out with their earnings today. Earnings every day yesterday, some reactions today as well, and earnings every day today. Well, you couldn't ask for more. Lots of news flow driving the markets today. Let's take a look at the trade setup for the day. Firstly, the world markets. I don't think we got too many cues from what happened in the world markets, to be honest. So just look at the US screen and you will see what I'm talking about. Very, very flat, a mixed bag of sorts, and which is what is happening in the Asian markets as well. You have a flattish move for some markets, the Nikkei down about 0.5%, the SGX Nifty indicating a start, which is very, very flat. So you don't quite have real concrete cues to take off from in today's session. The good part for the index is that it recovered a bit in trade yesterday. Now, if you just look at what the index has done, not just today or not just in the last few days, but over the last few weeks or months, it's been hovering around this 10,940, 10,950 odd level from where it tends to retreat. And then it comes to the levels at about 10,550 or thereabouts, and then tend to move up. So if you look at the kind of resistance and the support zones, it's been hovering around these levels. Just pull up the 3-month or the 6-month chart if we can for the Nifty, and you will see what I'm talking about. It tends to retreat from those levels and tends to fight support at these levels. It's right near those support zones, and the results of stocks like Axis Bank, HCL Technologies and Bank of Baroda might well give some fuel to the bulls in the session today. We'll talk about that too. What to watch out for from both the global and a local perspective. From a global perspective, we need to look at Theresa May heading back to Brussels to renegotiate the Brexit deal. So that's part one. Part two, more talks between the US and China. Remember, at the start of the week, we told you about how Wednesday and Thursday are stated to be two key days from the trade talk perspective. So do watch out for these. Very, very important, as also the FOMC decision. So 2 or 3 things to monitor from a global perspective. From a local perspective, today is a big earnings day as well. From the index perspective, IOC, ICICI Bank, Bajaj Auto and NTPC. But a lot of very important mid-caps which come out with numbers. So I'll watch out for the likes of Alkyl Amines. It's not a very well-tracked counter, but has been the favorite for some fund managers. So do watch out for that one. Castrol and Dhampur Sugar Mills add some bit of flavor to the mid-cap pocket. I'll watch out for IIFL Holdings for sure. All NBFCs become very, very important. And then, a clutch of very important mid-caps, the likes of Vinati Organics, which have been trading close to new highs, Kolte Patil Developers from the real estate space, and after what Godrej Properties has done, all eyes are on this one too. And Jubilant Foodworks, always very volatile, same-store sales growth numbers to be monitored. So a clutch of mid-cap names that will keep that side of the market alive and kicking. However, what to watch out for at 9:15 a.m., the 2 or 3 or 4 stocks that I presume or I believe will be the most important monitorables today. Firstly, the mid-size ones. So MGL, it was operationally a strong quarter. EBITDA per standard cubic meter at 8.8, which was the highest since listing. So optically, the EBITDA margins may have come off, but these numbers looked okay. Let's wait and watch how MGL reacts in the session today. Tata Coffee should react slightly negatively. The net profit fell 74%. Margins fell to 11.9% from 20%. I would reckon that there should be weakness out here. HCL Technologies has maintained the guidance after the numbers. It was a stellar quarter to my mind, but more importantly, a change in stance from always talking about how they're not sure if they will meet the upper end of the guidance or no. The management after this quarter firmly reiterated that they will meet the higher end of the FY19 guidance. there should be some positive moves in this one. I'll be surprised if this doesn't move positively today, and I'll talk about that why a bit later on First Word as well. And Axis Bank, the other one, again, I'll be really surprised if it doesn't move. Not making any prediction out here, but the net interest income growth of 18.4%, the highest in the last 10 quarters. Darshan will throw more light on this and what brokerages have said as well, but it was a good quarter from Axis Bank. Let's wait and watch what levels does that move on to. Speaking of banks, there is also Yes Bank in focus. In fact, let's tell you what's lined up on First Word today, because Vishwa and I will join in to talk about how 2019's brought in some good news for Yes Bank, with two overhangs being resolved at least for now. And of course, we also take a brief dive into the Ruias, who have made it clear that they aren't going to give up their bid to reclaim SR Steel just yet, even after the developments yesterday. HCL Technologies, as I said, put up a good performance in the third quarter and is as optimistic about future growth as anybody else. We'll talk about that. Amitabh Chaudhary is in no hurry to grow Axis Bank, especially not at the cost of profitability. Darshan comes in to give the numbers and the new CEO's roadmap for the private lender. And Yatin wraps up what's in store for Bajaj Auto as it comes out with its numbers. Start off with a development that happened post-market hours yesterday. The two Kapoor families have decided to bury the hatchet and appoint a joint nominee to the board of Yes Bank. The co-founders put out a statement on Tuesday, ending a decade-long feud, which had also gone to court. Vishwanath Nair joins us now with the details. Vishi, good morning. Just how important would this be from a Yes Bank perspective and maybe from a shareholder's perspective as well?
Well, good morning, Neeraj. Firstly, the point about nominee directors. So the idea is that both families will nominate one director each. And this nominee director is going to be a non-executive director. So remember that Pralay Mondal, who's supposed to be appointed as the executive director on the board, is an executive position. So he doesn't fall under this nominee directorship, which means that Rana Kapoor has to choose somebody to represent his shareholding. Now, there is a chance that he may choose himself to represent his shareholding on the bank board. But we don't know. We don't know as of now who these people are. Now, according to people in the know, what we understand is that both families are currently still negotiating consent terms as to what exactly will the shareholding represent, what will be the powers of the nominees on the board, and once they have come to that come to that decision, they will be submitting these consent norms to the court for the final approval, and then finally announce the names of these directors that they're going to appoint. They jointly have the ability to nominate 3 directors, so of which now 2 have been taken care of. The third director, we are still not clear. In fact, the families are still not clear as to who they are going to select as the third director. That, they say, will be a joint decision between the 2 families. So we still have to wait and see, who this person is going to be. There is a chance that this third person might be selected on a rotational selection basis, which means that during the first term, Rana Kapoor's family might select one, and during the following term, Ashok Kapoor's family might select one. There's a possibility of that, or there's a possibility that they may select only one person together who will then continue with this term. So, as far as the issues between the 2 families are concerned, now this has been going on for a very, very long time. Yeah, so 2009 is when the issue first came up, when Shagun Gogia wanted to be appointed on the board, and Rana Kapoor and the rest of the Yes Bank board were dead against it. They said that she doesn't have the required experience. 10 years have passed. There has been multiple litigation in court. Madhu Kapoor's family has been fighting this case against Rana Kapoor, saying that they are not giving them their rightful position on the board, while the promoters of the Rana Kapoor and the rest of the bank board believes that the ability to be on the board does not automatically come to the daughter just because the father has passed away. So this debate has been going on. The court has ruled, according to each side, they've ruled in favor of both. But the decision essentially was that they have to come to a decision jointly. So to that effect, Rana Kapoor cannot push through any appointments on the board. So because of which Pralay Mondal's appointment has been pending since 2013, which is when he was first nominated to be on the board. So, a lot of overhang on that issue has largely been sorted. We still need to see what happens to Rajat Monga. Rajat Monga was touted as the next CEO, but then Ravneet Gill stepped in. The board has also yesterday made a decision that they will be appointing a special board member who will be on interim duty while Rana Kapoor leaves and Ravneet Gill joins. February is an empty month for them. So they will choose whoever is the senior board member who will take over the bank during that interim. So that's what has happened yesterday. Now, what happens to the stock? That's, I guess, you're the best person to talk about.
Yeah, well, a lot more weighing in on the stock than just this, but interesting times for the stock as well.
Sure.
With the new CEO at helm, and whether people believe that there will be a PE re-rating. I think that's the call. But if that was, well, not technically curtains, but for the lack of a better word, curtains on one drama.
Yeah.
They're not curtains on the other drama, because while the NCLT has rejected that bid, there's still some more to this party.
Yeah, so that story doesn't seem to end ever. but so yesterday, finally, the NCLT decided on the maintainability of the promoters' bid to settle the account in Essar Steel. So that was one of the decisions that the NCLT was supposed to take. They've taken that. They've decided that the promoters cannot settle on their own accord. They have to convince the lenders, and 90% of the lenders have to agree to the settlement plan, and only then can the plan be withdrawn. Primarily because the lenders were the ones who submitted the application for insolvency, so only they have the right to pull it back. The promoters had argued that under Section 12A, they have the right to settle, but there is no right as such, according to the NCLT's judgment yesterday. In a statement they put out yesterday, the Ruia family very clearly said that they felt they had the right to do that because Section 12A allowed them to do that. They will wait for the actual final order. They said they were paying about 54,000 odd crore to settle the entire case. Remember, financial creditors are owed about 49,000 crores. So this will be over and above that amount. So we will have to see, how the Ruia family treats this, whether they go to higher courts and try to challenge it. Lawyers seem to have a split view. Some believe that everybody has the right to object to a law. Until the Supreme Court decides on the matter is always open. Others believe that Supreme Court has already decided on the validity of the IBC. So they have made it clear that the IBC in its current form is completely valid and there cannot be any challenges in the matter. So we will have to see whether that appeal business goes on and whether that contributes to the delay. In the meantime, SBI said that they were glad this part of the debate was over, but there's still a case filed by Standard Chartered as well as some of the operational creditors who were against ArcelorMittal's bid. So the NCLT has to yet decide on that. They have to decide whether ArcelorMittal's bid is acceptable. All of these decisions will take place over the next couple of days. But today they're going to begin hearing on the ArcelorMittal plan. What we understand is that SBI had put up all the loans for Essar Steel on sale. They have pushed the deadline from 30th January to 11th February. And the expectation that the SBI chairman had was that by 11th February this matter will be resolved and hopefully they may have money in their account before they have to actually sell the account to a prospective buyer. So, all of these matters are still hanging right now. Today is when the ArcelorMittal hearing will start, so we'll get to know what the NCLT feels about that plan. Wow,
some interesting times ahead for this particular case as well. And I think in Davos we've seen both the, well, not technically the warring factions, but both sides of the party give their thoughts as well. But Vishy, thanks for putting this into perspective. And two very interesting things. May not be direct market implications, but from a business perspective, very, very important. Now let's talk about direct market implications on 2 or 3 names that are very, very important. Firstly, I'll start off with HCL Technologies and the numbers that came out. Well, arguably looked a very good set of numbers, not something that the market would have priced in with the kind of estimates that were there. So I've just thought I'll just highlight the key takeaways and the guidance, and then one brokerage note which sums up what I thought was the best summation for HCL Tech. So firstly, the key takeaways, the constant currency growth of 5.6% quarter on quarter versus estimates of 2.7%. EBIT margins at 19.7% versus estimates of 20% was probably the only drag in the quarter this time around for HCL Technologies. Higher employee expenses and SG&A up both on a quarter-on-quarter basis, essentially leading to what happened to the EBITDA margins and essentially increased costs leading to this. Now, the key highlights. Europe came back with a bang for HCL Technologies, 12.9%. Remember, it's a reasonably strong geography for HCL Technologies. America and rest of the world about 4.5%. BFSI was down about 0.6% from a vertical perspective. But engineering and R&D up 5.1%, and IMS, it was up about 10.4% on a quarter-on-quarter basis, not down. It was up 10.4%. Infrastructure and management services came back with a bang, and that was really the highlight for HCL Technologies. Let's move on to the guidance, because that was where I think the key factor played out for HCL Technologies. It retained the revenue guidance of 9.5% to 11.5% for FY19, which was known. They've maintained the EBIT margin guidance as well at 19.5 to 20.5%. But the more important point is that it expects to achieve the revenue growth at the upper end of the guidance. I think that is the key point for HCL Technologies. All through the last 2 or 3 quarters, while they have said that they will maintain the guidance, they've not given a clear direction about whether the guidance will be maintained at the lower end or the upper end. Now they've given a clear direction that they will maintain the guidance, so they'll meet the upper end of the revenue guidance. That, to my mind, is the key when it comes to HCL Technologies. Now, what does all of this mean for the stock? In all probability, it should start off well. But let's pull out that one key brokerage note, which I thought summed up what HCL Technologies was trying to say very, very well. So, the CLSA view on HCL Technologies should come up on your screen. They have, of course, said that they are bullish. They believe the rebound on organic growth augurs very well for HCL Technologies. They are bullish. They see that HCL Tech is likely to join the growth recovery that TCS and Infosys and several other mid-cap IT peers are enjoying in calendar year 19. So, in effect, it becomes a part of the pack. Until now, it was not the part of the pack. The sharp recovery in the core IMS deal ramp-ups and organic growth remain the near-term catalysts. But because the valuations remain undemanding at 12 times, CLSA has no hesitation in going out and recommending a buy. So, multiple factors working for HCL Tech, save for the margins, almost everything else worked very well. It's not really approached this earnings season with a bit of a bang. Won't be surprised if there's a positive reaction. And of course, you can hear the management of HCL Tech speak to us at about 8:40 a.m. So, CEO C. Vijayakumar and CFO Prateek Aggarwal will be talking. So, do join in for that. The next piece is on Axis Bank. The profits jumped over 2-fold in the third quarter, surprising the markets. And this was largely aided by recoveries and other income. The private lender has also charted out a new strategy under the new CEO. Darshan is standing by with the key highlights from both the numbers and the conference call. Darshan, good morning.
Yeah, so break it up into two, and both of them were very good. The numbers on just the numbers and what the new CEO had to say. So firstly, the numbers above estimates on all front. If you're looking at the net NI growth of 18%, coming in at 5,600 crores versus our estimate of 5,400 crores. Profit also coming in at almost 1,700 crores versus our estimate of 1,200 crores. No doubt the other income and some sale of properties did manage to help. The asset quality also managed to improve. Not drastically, but yes, there is an improvement as far as asset quality is concerned. The slippage is at almost 3,750 crores. Corporate is almost 1,900 out of it. Retail is 490, and SME is close to 230. That's the breakup. They've recovered almost 1,000 crores from 2 accounts which were written off earlier, so that is positive for them. And they sold 2 strategic investments, getting a one-time gain, and that is something that aided the profit of the company. The second part is the commentary was very strong by the management, the new CEO. Firstly, he said that he's comfortable with the asset quality and he's targeting an 18% ROE in the next 3 years. So that is something that is positive. They're saying they are looking at more efficient operation, reducing the credit cost and evaluating the loan portfolio. Apart from it, the focus remains on retail loan, especially the unsecured loans to internal clients. They are focusing on productivity, on peaking out of credit cost, and may venture into insurance over the next 2 to 3 years. So that's something that the new CEO said. The key highlights, if you look at what brokerages have said, most of them have actually raised the target price. Credit Suisse has upgraded the stock. So a lot of positive views that are coming in on the counter. Slippages was a tad higher this time around, but recoveries was decent, and that was there. And negligible divergence for FY18, and the loan book now looks transparent. Most of the brokerages have raised target price. CLSA has raised the target price to 840 now, from the earlier 800. Prabhudas Lilladher has raised the target price to 745. Macquarie has raised the target price to 620. So across the board, so we've just taken few, like Credit Suisse has upgraded, but I think Axis will start on a strong note today. I think ticking all the boxes for Axis this time, and more especially now, it's important to see ICICI Bank also, because while the other private sector banks have been in line, Axis has done really well compared to the others. So all eyes will be on ICICI, which will report numbers today. So a similar performance. Expectations will be much higher for ICICI is what I'm saying.
Yeah, surely. And I think the street will already be talking about it. Darshan, thanks for putting that into perspective. Remember, while the markets will react, this shouldn't come as a bit of a surprise to a lot of people who are parked in those corporate-facing banks, believing that Q4 will be, or Q3 and Q4 will be the periods when they'll bounce back. I think the interesting bit is also what Amitabh Chaudhary is trying to say when he's talking about how Axis will grow under his leadership. And he's in no rush, very conservative, not wanting to really have big bang growth at the cost of asset quality. I think that was the summation of, a small summation of what he's trying to say. A story around this is there on the website as well. This is interesting. Good commentary, good delivery, and should show in the stock price today. However, the next piece and the last piece on First Word today is on a result that is likely to come out, and that is Bajaj Auto is likely to report a subdued quarter despite the 26% volume growth, and weak realizations are to blame. Yatin Mota is here to take us through the expectations. Morning, Yatin.
Well, Neeraj, the expectations are not that great despite Bajaj Auto posting almost 26% quarterly growth in terms of volumes. We are expecting that the margins and the operating performance will be at a multi-year low. We are expecting the margins, which is the most important figure, to watch out for at 16.1%. And remember, this is probably one of the multi-year low margins that Bajaj Auto could post during the third quarter. Now, if you look at the revenues, you are expecting a 17% growth because of the 26% kind of a volume growth that I was indicating. Of course, this will be largely driven by the two-wheeler sales. However, this time we have seen a decline in the overall growth rates for the three-wheeler segment, and because of which we are expecting the EBITDA to remain almost flat at 1,200 crores. Profit seen higher by nearly 10% at 1,047 crores, and this is largely to do with the fact that this time we are expecting a very high other income as well as lower tax rate on a year-on-year basis, because of which we could see some fillip in the overall overall profitability. Now, if you look at the key factors to watch out for is the management commentary on the rural as well as the urban demand, what kind of inventory levels that they are sitting on. Of course, the management had indicated their plans to launch an electric scooter very, very shortly, and the management commentary on that also is something important that we'll be watching out for apart from the earnings.
Okay. Jatin, I remember that when we were talking about Maruti, I asked you about what is the most important factor you'll watch out for. You had said the margins, and the margins came in way lower, and I think that was one key point why Maruti corrected. What is that one most important number from Bajaj Auto that you will watch out for?
That will be again, Neeraj, margins, because the management, earlier was talking about 19-20% margin range. They have not been able to meet that. This time the two-wheeler contribution is higher than the three-wheeler contribution, because of which the margin would be anyways under pressure, apart from the commodity costs, which are always high for all of these two-wheeler and four-wheeler companies. So let's see how really Bajaj manages between margins and market share, or margins and volumes, because clearly at this point in time it seems like that management is looking to chase volumes rather than margins.
Yeah, I think it's self-admitted as well. I think they admitted something to this effect too. Okay, Yatin, thanks for putting that into perspective. That's Bajaj Auto for you, or rather, what Bajaj Auto could do in the quarter. Yatin Mota bringing that for us. Well, that's all that we have on First Word. Keep in mind, a lot of stocks will react, and we'll talk about all of those as soon as we get into the next discussion, because there's lots more lined up. We discussed the pulls and pressures on HCL Tech's business with CEO C. Vijayakumar and CFO Prateek Aggarwal. That's happening at 8:40 a.m. Very important conversation, can't afford to miss. Then decode the TeamLease Services earnings with Managing Director Ashok Reddy. He joins in at 9:30. And then talk of all that's happening within the financial space, in the NBFC space in particular. Whether it's getting over the liquidity crunch. Digant Haria of Antique Stockbroking, who tracks this space very closely, would be joining in as well. After this break, full tilt towards the day's trade. Stay tuned to Bloomberg Quint Live.
विश्व भर में लोगों से कहना चाहता हूं, कम मेक इन इंडिया।
कोई ऑटो रिक्शा चलाएगा, कोई पकौड़े की दुकान करेगा, कोई चाय की दुकान करेगा। ये सब चीजें रोजी रोटी कमाने की व्यवस्था हुई है कि नहीं हुई?
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome, you're watching IndianOpen right here on Bloomberg Quint Live. Good morning, Neeraj.
Morning, Devina.
Yesterday's session was an encouragement, looking at how we turned around from the lows of the day and actually managed to close flat. And the broader markets did even better. They, in fact, closed with gains.
Yeah, NBFCs too did reasonably okay. I think save for Reliance Industries, which weighed in heavily on the energy index, by and large, there was a bit of recovery that we saw. Maybe the market expected a lot of groups from
the Cobra post.
And that didn't come about.
Yeah, so I think that was more like a relief.
Likely that. But yeah, a bit of a bounce, and we are near the support zones from where.
HDFC came up with numbers, Bajaj Finance reported numbers.
Very good set of numbers.
Yeah, so that probably helped the sentiment, particularly on the financial space side of it.
And I wouldn't be surprised if it continues today with Axis and BOB.
Yeah.
Both looking reasonably okay. Axis very strong actually.
Yeah.
And HCL Tech doing reasonably okay too.
Yeah, so probably, you know, the talks of organic growth returning to HCL Tech and pushing it in line with its other peers like TCS and Infosys. That's something to keep an eye out for. And it's relatively cheap compared to the rest of its peers.
For sure.
Even valuations on that front supportive. But let's see how the stock prices react this morning. Let's take a quick look at Asia and SGX Nifty, and then we'll talk about the futures and options side. It's the week of expiries. That's Asia for you. Down in the red, but a marginal cut coming in for Shanghai and Hang Seng. Nikkei is down by 0.5%. For SGX, we're absolutely flat. There's no change thereof. But on to futures and options then. And Darshan is joining in right now to take us through what's happened on the rollovers front and anything interesting that he found out from specific stocks. Darshan.
Yeah, so rollovers are in line with what what happened over the past few quarters and for the past few months. But the SGX Nifty is indicating an absolute flat outlook. The Nifty was down in trade, but remember, it recovered significantly from the lows of the day. The rollovers at 32%. The Nifty Bank also, the rollovers are close to 32%. So that's the traction, and Nifty Bank will be much more in focus today because of the Axis Bank results that came out and potential ICICI numbers that will come out today. The Wix came down by 2.5%. It's at 18.5 this point of time. Where are positions being taken? We are almost 2 or 3 days away from expiry. 10,700 to higher levels is where call writers are active, and 10,700 to lower levels is where put writers are active in trade. So between the 10,700 to 10,800 level is where the markets are pretty much factoring in a Nifty expiry. Even in trade yesterday, if you're looking at it, some of the call writers were active, but at higher level positions are being shed because the markets are actually range bound over the past few days. As far as positions are concerned on the rollover, on the PCR side, actually very stable both for the Nifty as well as the Bank Nifty. A couple of stocks come in the F&O band. The three remain Adani Twins as well as Jain Irrigation. Dewan Housing comes in the F&O band, and so does Bank of India. Some of the counters in focus which saw high open interest build up. You had Bata, which continues its uptrend. Cummins and Godrej Consumer saw fresh shorts. Godrej Consumer fell in post the numbers, while fresh buying was seen in ICICI Prudential and JSW Steel on decent open interest build up. In terms of where positions, open interest was see a decline. Vodafone now at the 30 level. Open interest was down almost 40%. Again, short covering was seen in Adani Enterprises. Piramal saw long unwinding that came in, and so did Tata Communication.
Right, Darshan, thanks very much for that. That's a few stocks that you're going to be watching out as we progress for trade this morning. Gurmeet Chadha, co-founder and CEO at Complete Circle Consultants, is joining us on the show this morning. Gurmeet, a very good morning to you. And it looks like results are once again taking center stage in terms of specific stocks. Yesterday's session saw Bajaj Finance. We had Hdfc Limited reporting numbers. You've got a good, strong set of numbers coming in from Axis Bank as well. And HCL Tech from the IT pack, probably trying to play catch up with its peers. What have you made out of these numbers?
Good morning, Devina. So I think the markets were catching cold, like the northern part of the country. I think, but the results came with a bit of a warming impact, maybe. So very happy with Axis, Bajaj Finance, and HCL Tech in particular. If you see Axis, I think the loan growth seems to be coming back. The retail loans grew at 20%. It was very heartening to see the management give a near-term guidance on the ROE. They spelled out what are the ROAs they will be focusing on. The slippages were much lower. Even if you remove the provisioning and the contingency reserves, the PAT jumped up almost 130%. So basically, a tick on all the right boxes there. Bajaj Finance again, continues to deliver, loan growth on that kind of a base now. It's and mind you, it has 15 plus business lines. It's just not consumer durable or SME or construction equipment. And to manage that kind of NIMs of 10% loan growth, I was just doing a back testing on numbers. It's a 36% growth on loan from 2013 to 18. That's a staggering number, and a guidance of 25-30% for next 3 to 4 years. And the industry is moving towards lower yielding secured asset business with the kind of environment we are in. To manage that kind of operating leverage in them is really special. And HCL, and I've been telling you, we've been having this discussion on large cap IT. Very positive there. I think if you see amongst the larger peers, 5.5% sequential growth on CC terms is quite good. And the guidance was on the upper end. So they talked about from 9.5 to 11.5, they were talking at the upper end. So these three results in particular were really heartening. And these are index heavyweights. So should calm down the market a bit.
Would there be, Gurmeet, to your mind, after what HCL Tech has done this time around, a bit of a P multiple re-rating as well for HCL Tech? The fact that people will estimate the higher end of the earnings and therefore the EPS numbers move up ever so slightly. But does it move up from this 12 times, or does it need to deliver a couple of quarters henceforth for that to happen?
So you're right, Neeraj. Latter seems to be the case. I think it will be a gradual re-rating. I think in past, HCL has been a little patchy, in terms of giving a guidance and not adhering to it. So I've been speaking to some clients who are at senior levels there, and I think they're very positive on the overall business outlook. The digital business continues to do very, very well. Organic growth coming back is very, very heartening. It's all along, they've been big talks on inorganic growth. So and at 13 times FY20, you're right. It's one of the most attractive stocks, probably where Infosys was maybe when the Vishal Sikka episode happened. So, but I think it will be gradual. Kind of sentiment right now, you don't expect immediate re-rating.
Yeah, I guess so. Don't expect immediate re-rating, especially because of the kind of sentiment. At some point of time, we'll talk with Gurmeet Chadha about some of the other earnings as well. But let's discuss some of those with our research team members. So the key earnings, the stocks in news, and a couple of very important companies that will come out with numbers, noticeably ICICI Bank. Nikki, Darshan, Yash, as well as Somit joining to talk about all of those. Good morning, all of you. Let's start off with the stocks in news first, then we'll move on to the results that have come out, and then the two previews from Somit as well as Darshan.
Sure, I'm going to start off with L&T first. In that case, the company would be selling in 2.9% equity in L&T Technologies Services with an option of oversubscribing to around the 2.5%. The floor price set is around that 1,610 per share level, which implies a discount of around 6% from the previous market price. And L&T with this intends to bring down the plans to meet the public shareholding norms which have been laid out by SEBI. HG Infra Engineering, which has received a financial closure coming in from NHAI for one of its HAM projects, small tune, but then small size of the project. It's around, the bid is around the 606 crore kind of a level. Nevertheless, financial closure means that it will finally start percolating. The company will start building into the order of this company. DHFL, which has given a clarification stating that Cobra Post Expose has been done with an intention to cause damage, and the company is confident of meeting any scrutiny on any aspects of its operation. Signed board, which is going to be considering a buyback proposal on Feb 1. So that's one counter that we'll keep an eye out on. Apart from that, we're also looking at DCM Shriram, where the board has approved an investment coming into the tune of more than 1,000 crore for expansion of Bharuch plant, and Coal India, which is going to be getting around 1,000 odd crore of cash from 3 of its wholly owned subsidiaries as they approved buyback.
Okay, let's wait and watch what happens here. Yash, what about the key results?
Right, I'll start with Tata Steel Bsl, which was Bhushan Steel earlier. They reported a good set of numbers. Revenues have grown 11% on a year-on-year basis to about 4,900 crore rupees. Margins have expanded to 20.6% versus 13.8%, whereas the net loss has shrunk down to 240 crores versus 1,600 crores. Similarly, Bank of Baroda reported a good set of numbers. Net interest income is up 8%. Net profit has gone up by 4.2 times to 471 crore rupees on account of lower provisioning, which has come down to 3,400 crore rupees. The asset quality too has improved, so the GNPAs are at 11.01% and net NPAs at 4.26%. Welspun Enterprises, that one too came out with a good set of numbers. Revenues are up 49%. EBITDA has gone up by 4 times. Margins have come in at 10.4% versus 3.9% in the same quarter last year, whereas the net profit too has jumped up by 3 times.
Okay, we will watch out for some of these, some interesting numbers, and then some interesting numbers to watch out for. Let me start with what I know will likely deliver a good quarter, ICICI Bank. Darshan, you were talking about it earlier. What's the anticipation?
Yeah, I think now the bar has been set much higher for ICICI.
But still the numbers?
Yeah, 19% both NII growth and bottom line growth is something that we are anticipating for ICICI Bank. As fair, we are expecting the NIMs to be stable at close to 3.3% this time around. Fee income is expected to grow in much higher at close to 15%. Slippage is close to 3,000 crore, and this will mainly come in from the watch list or the earlier impaired assets, existing impaired assets. Coverage on overall stressed loans should continue to increase. What do you watch out for? Especially the management commentary on recovery trends in some of the power loan assets loans that they've given. Outlook on credit cost. What is the loan growth outlook, especially on the corporate segment, and how are the subsidiaries performed? That's something we need to watch out.
Okay, so the bar is set higher, but these are the numbers before the Axis Bank numbers came out. Keep that at the back of your mind. Somit, what about IOC?
Well, it is expected to be a weak quarter, and that is because of the weaker gross refining margin and higher inventory losses for Indian Oil Corporation. Now, if you see the headline numbers for Indian Oil Corporation, the revenue is expected to be lower by nearly 6%, while the EBITDA is expected to fall nearly 82%. Also, there's a possibility that the company might report a loss on the operational front. Margins are expected to come in as low as 1%, while the company is expected to report a net loss of close to 680 crore rupees as against a net profit reported by the company in the last quarter of close to 3,250 crore rupees. Now, the core gross refining margin, that is expected to come in at around $2.4 per barrel versus $3.5 per barrel reported by the company in the last quarter. Now, it is expected to be a weak quarter because of lower GRMs and higher inventory losses. Now, Singapore gross refining margins averaged around $4.3 per barrel versus $6.1 per barrel, while the Brent crude averaged around $68.81 per barrel versus $76 per barrel in the last quarter. And that is the reason why the company is expected to report a higher inventory loss in this quarter. Now, some improvement in marketing margin will slightly offset these negatives for Indian Oil Corporation in the third quarter, and that is because the gross marketing margins had inched up higher in the mid-November and December month of 2018. Now, the gross marketing margin earned by Indian Oil Corporation on sale of every litre of petrol, now that averaged around 3.6 rupees per litre versus 1.6 rupees per litre in the last quarter, while on diesel it averaged around 3.2 rupees per litre versus 2.2 rupees per litre in the the last quarter. Lastly, on the operational side, if you see, the crude throughput is expected to be higher by nearly 4%, while the domestic sales volume are expected to be higher by nearly 7%. Lastly, key things to watch out for from Indian Oil Corporation earnings would include the utilization levels of Paradip refinery, the gross refining margins trend that the company has been seeing in the fourth quarter, the capital expenditure plans of the company, and any update on foreign exchange losses and inventory changes would be the key things to watch out for from Indian Oil Corporation earnings.
Okay, we'll watch out for all of these. Thanks so much, all of you, for joining in. In moments from now, we'll have to cut across to the HCL Tech management as well, so something to watch out for. But Devina, it doesn't seem to be a bit of a surprise that all of these stocks are in focus, and Axis, HCL, BOB, all of these could have a positive reaction in the session today.
Yeah, we're going to be watching out for a lot many more stocks reacting to those numbers. But HCL Tech is going to be in focus. The revenue growth of 5.6% has surpassed expectations in the December quarter. This has buoyed the management to stick to their earlier guidance of the whole year at 9.5 to 11.5%. Agam Vakil from our research team had a chat with the CEO and the CFO at the company and began by asking about the key drivers behind the revenue growth. Listen in.
I think we've had a fantastic quarter. I think across the board, we've executed extremely well and we've delivered excellent revenue and margin performance. We're also very happy that this has again been one of the highest booking quarters. You might know that 2 quarters back as well, we said it was the highest booking quarter. So this is the 2 quarters in a fiscal, we've had the highest booking. Right. And we've had a very good revenue growth. And the revenue growth is across every segment of our business. Our Mode 1, Mode 2 business has grown 13.3% quarter on quarter. And all of that is organic growth. And Mode 1 has also grown at a healthy rate. Mode 3 is also grown. All geographies have done well. Like all the geographies are in double digit. And even our rest of the world is in double digit year-on-year growth outside India. Yeah. So coming specifically to the organic growth, when in the beginning of the year, we said 5.25% will be organic. And now we are guiding towards the upper end of the range. So hypothetically, if you take 11.5, I think about 5% will be inorganic and 6.5% will be organic. And we will see how this quarter pans out. We still feel very optimistic about a lot more that can be done.
Okay, that's great. That's good to know. What this entire quarter has seen, and is for the entire industry, is an uptick in people's costs. I have seen that employee benefits also rise to a certain extent. Your outsourcing costs have also gone up. The question really is, if the entire industry is talking about a talent crunch, a supply situation here, in your experience, how long do you think it could take before things can get better? If this is a cycle, or what phase is this in?
Yeah, talent crunch, the way we are addressing is twofold. One is significant amount of focus in reskilling and developing our own employee base. That's the biggest driver. The second one is on localization. If you look at our presence, we have 120 plus delivery centers outside India. And 61 of them have capacities greater than 100 people, and some have even over 1,000 people. We took these localization initiatives as a very big agenda even 10 years back. So we have 2/3 of our employees in the US are locals. I think some of these proactive steps that we took over the last several years is helping us in good stead to address the increasing demand. And that's why we feel very confident and positive, even from the supply and fulfillment perspective. And this quarter we added 4,500 odd people, so at least 3,300 plus would be organic, right. And that's a good growth in headcount as well.
Okay, Prateek, can you come in on this aspect too? Well, how are you reading costs? How are you reading an increase in costs because of this supply crunch? And again, if you could tell us about perhaps some implications on margins for this quarter.
So, we were at 19.9 last quarter.
Yeah.
We are at 19.6. And that drop of 30 basis points is basically because of costs increasing.
Okay.
The fact remains that when you have such a huge 5.6% quarter-on-quarter sequential growth, it will come with a little bit of cost as well.
Sure.
And what you're seeing in the line item by line item is largely due to that. But then there is this 30 bips extra that is there as well.
Okay. Could you also tell us? Yeah, sure. So could you also tell us about how utilizations panned out, perhaps a little more on currency and several other factors that also, move on margins? And now you already clarified that 30 basis points is because of employee benefits. Yeah. Then where is that, compensation coming in from?
Yeah. So this was the second quarter of increments that we had. We scattered it over a few quarters instead of all being lumped in one quarter.
Yeah.
And so the increments was a lot larger than that. To your point about Forex, there was a lot of fluctuation during this quarter. In the end result for the quarter, it is 15 basis points of benefit.
Okay.
So the 30 is the net amount, and therefore the 45 is the real reduction in margins, because 45 basis points is the real reduction in margin on a quarter-on-quarter basis.
Sure.
Like I said earlier, increment was larger than that, but then we were able to offset some of that with productivity benefits.
Okay. CVK, let's come to application services. If I consider the last 12-month growth, we've seen about 1.8% uptick there. Again, a third of your revenues come from this particular area. The question that I get from a lot of shareholders in general is that they would really like to know about what HCL Technologies can do to perhaps spur growth here. What are the challenges as well here?
Yeah, application services has three components. One is the traditional application support and maintenance, and a little bit of traditional AD kind of work. The second one is on the enterprise packages such as SAP, Oracle, and things like that. And the third is all the digital analytics, big data, SaaS, and some amount of IoT-driven application work. Yeah. Right? So if you look at these three buckets, definitely our overall digital applications, modernizing, all of that is growing very well. A big part of that is reflected in the 13.3% quarter-on-quarter growth on our Mode 2 services.
Right.
Now, there is continuing pressure on the traditional SAP kind of work, because a lot of that work is no longer happening. A lot of that is getting into cloud, and we are also ramping up on SAP cloud and other areas, but still I see some pressure on that area. And the traditional ASM AD space is also under pressure due to automation and productivity and other things. So the outlook for this service is to continue to accelerate our digital services, which we are doing very well. And we've done very well this quarter, and if we continue this clip, it will start reflecting in our application services growth as well.
All right, back to the markets then, and we'll see how HCL Tech opens up for trade this morning. But let's bring in our technical experts. Chandan, Taparia, Associate Vice President at Motilal Oswal Securities, is joining us on the show this morning. Chandan, let's start off first with what your call on the index is going to be. Yesterday's session was encouraging because we bounced back from the lows of the day, but still just holding on to that 10,650 mark on the Nifty.
Yeah, good morning. Overall, the market has been making lower lows from last 5 trading session. Resistance are gradually shifting lower, and market made the lowest zone in this entire month or series to 10,583. So selling pressure is clearly visible. However, in last half an hour of the session, market recovered sharply from the lower levels and closed on a flattish to negative note near to 10,650 kind of level. So we have seen recovery from the lower levels, but the problem is follow-up is required in the market. After the consolidation in between 10,700 to 10,950, 85 zone, market has broken that range on the lower levels and shifting lower. So now some bounce could be seen, but overall bias could remain negative till it remains below 10,757, 77 zone. Overall weakness could take index towards 10,580, 10,535 kind of level. So some bounce could be seen, but we'll use that bounce to initiate fresh short position or to create the downside move towards 10,580, 530 kind of level.
Okay, that's a quick call on the indices. Let's take your stock calls as well, Chandan. So we'll start off first with Dr. Reddy's and then Hind Petrol.
Yeah, as mentioned in the market, however, some recovery could be seen, but overall trend would be under pressure because after a multiple attempt, market failed to surpass 10,985 and resistance shifted lower. So looking at that, very selective stock space action could be there in the market. We have positive view on the selective IT and pharma counter, and most of these sectors have done well in last couple of trading sessions, even after the decline in the broader market. So first trade, we have selected to go long with Dr. Reddy. Overall, this stock is holding well from last 3-4 weeks. Lows are continuously slightly shifting higher on the weekly scale, and it is respecting to its rising support trend line with the hold of 50-day exponential moving average. We have seen a strong recovery on the last trading session, and this stock is forming the rounding formation on the week on the Harley scale as well. So that setup indicates some up move could be seen in the counter. One can buy on a small dip with a stop loss of 26.10 for an upside target towards 27.35, 27.50 level. Talking about HPCL, here we are getting a sign of the weakness. After the multiple attempts, the stock failed to hold above 50-day exponential moving average and broken its immediate support trend line. And overall, it failed to surpass its falling supply trend line on the daily and the weekly scale and turning lower. So a small drip can take it to lower levels, and pace of weakness could be higher in the counter. So looking at that sense, recommending to sell on Hindustan Petro with a stop loss of 242, while on the downside it can drip to us 225 to 224 levels.
Chandan, stay on with us. Lots more to talk to you about. But on to a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock or a sectoral trend that he is picking up. Yash, what's on this radar? What's on your radar today?
Good morning, Devina. So we are tracking Union Bank on the charts, and a positive buy signal coming on the back of the bullish engulfing pattern that is formed on the charts. Let's first try and understand what it is. Basically, it's the formation of a bullish candle right after a bearish candle, wherein the body of the second candle completely engulfs the one ahead of it. The longer is the size of the second candle, the greater are the odds of a rally. Now coming to the charts over here, what we've seen is that the stock had been falling over the last 8 trading sessions, which is its longest losing streak in over 2 years. But in yesterday's day of trade, it moved up on the back of heavy volumes and this big green candle completely engulfing the body ahead of it. Additionally, the faster 50-day moving average that has crossed above the 200-day moving average to form a golden crossover. So that could also potentially mean that from these current levels, the stock could move higher.
Okay, and how well has this worked for Union Bank in the past?
So Neeraj, 4 out of the last 7 times that a bullish engulfing pattern has been formed, the stock has managed to run up as much as 7%, close to 8% over the next 1 month.
Okay, thanks a lot for that, Yash. One more piece from the Bloomberg terminal, the BQ Edge. For a deeper insight on Indian equities, visit our website bloombergquint.com, where we identify triggers that have emerged in a specific stock or a sector every single day. On today's Bloomberg Edge, we feature SBI and what its relative rotation graph and price stability charts indicate. That is a BQ Blue exclusive. Well, since we're on the topic of stocks, let's welcome in our next guest before we get back to the fundamentals. Shrikant Chouhan, Senior Vice President for Technical Research at Kotak Securities, with us on the show as well. Shrikant, good having you. Thanks for joining in. We'll get into your index view in a bit, Shrikant. Since we're already on the topic of stocks, would you start off by telling us what are the stock recommendations that you have for us today?
Good morning. See, the way yesterday there was recovery in the market, it was very stock specific. We saw activity in those companies which are really good in terms of their fundamentals, and they are not fallen as compared to the broader market. So we like Hindustan Lever, we like United Phosphorus, UPL, which are trading above their important support levels till yesterday. Today we are expecting UPL to do well. I think the company is going to report its number on 31st, but today we are expecting stock to move towards 780, 85 kind of levels. So we should look for adding the long position on UPL with a final stop loss below 750. We also like Hindustan Lever, which was around 1725, 1730 in the morning yesterday. It closed around 1755-60 levels, but from here also we are expecting stock to move towards 1790 or 1800 levels, and here we have to keep a stop loss somewhere around 1740.
All right. Got that. Just stay on, Shrikant, we'll come back to you. Gurmeet, want to come to you with regards to most of these housing finance companies. Yesterday's session, obviously, probably breathing a sigh of relief with regards to, the Cobra post expose and what would come out from there. You saw most of the stocks moving up except for Divan Housing Finance. I mean, you've already got management commentary saying that the intentions were, mallified and so on and so forth. But what's your sense within this space, and particularly in light of the numbers posted by Divan Housing Finance? What would you, what kind of a call would you give on it?
So, Devina, I would, as I said, the bond market is the biggest indicator when the stability will come to the HFCs. I think, barring HDFC, I would not venture into any of the other stocks. If you see, the AAA ones are now able to raise money between 850 to 9. That's the range. If you see, even if you see Bajaj Finance, the cost of funds they reported was 8.2%. So the quality ones have been able to come back and raise money. The ones which are better quality, like a Mahindra Finance or a Shriram Transport, we saw their NCDs at 950 to 980, which to me is still 100 basis higher. If you look at some of the other names which have been affected, like an India Bulls, or they're obviously still raising money at 10.5, 11. Until the time and your repo rate is 6.5, till the time these spreads remain 300, 400 basis points, I think that this cost of funds will be an issue. And so it's not just liquidity issue, it's a trust issue right now. And even if you look at some of the better names like an Edelweiss or an India Infoline, they're also raising 1 year to 3 year NCDs at 10.4, 10.5, which to me is very high. So actually the opportunity could be on the fixed income side there rather than buying these shares right now.
Shrikant, two stocks, and while we're at it, let's talk a little bit more about HDFC Limited and whether or not there's a trade opportunity there. And HCL Tech, you're probably going to see a result reaction today, but would you take a call on this on the trading side?
Devina, see, like for HDFC Limited, formation is very clear. It is forming some multiple top sort of formation close to 2020 levels, and from there we saw some selling in the stock. Yesterday the stock was down and it was very close to its important support area of 1900, which is psychological support for it. So broadly the stock is in the range. Until the stock is not sustaining well below the mark of 1900, we are expecting stock to move in a range. So again we can expect the levels of 1960, 1970 on the higher side, but that should be an opportunity for those who are like stuck in the long position on HDFC. So we should look for reducing long position on HDFC Limited, because we are not expecting stock to trade comfortably above the mark of 2000 or to reach those levels. For HCL Technologies, again the view is same. Here also the formation is clearly indicating us that it is in a range. It is not crossing the level of 1000. At the same time, on the downside, having very good support close to 930, 920 area. Today, if there is a higher opening, we should look for reducing long position on HCL Tech, and we should look for shifting in other stocks like Tech Mahindra or Infosys or Wipro. There we have like bullish view, and we are expecting they should perform in the medium term.
Well, that's an interesting technical thesis, because fundamentals might just suggest something slightly different. So let's see what wins today. Do the charts win or do the fundamentals win with regards to HCL Tech, at least, if not the others? Gurmeet, a couple of mid-sized numbers, and any thoughts, for example, on Mahanagar Gas? The numbers optically seemed bad, but the unit gain seemed to be really strong, the highest since listing. Any thoughts here?
So Neeraj, positive there. It's virtually a monopoly business. They have exclusive rights for Mumbai, Raigad, and some of the other regions, including Thane. They cover almost 10 lakh households, almost 4 lakh vehicles, and we are net short 50% on the natural gas. So I am pretty positive. In fact, you would see more and more push towards it. So it's a secular story. 1 quarter, 2 quarter here and there won't make much of a difference. So one can but as we've been discussing, the sentiment is such that one should not rush into buying everything. Use some opportunities and maybe accumulate this one.
Okay. The other set of stocks, of course, remember a lot of other names. So we haven't discussed Bank of Baroda. I thought the numbers were okay. Operationally, pretty decent. Himadri, asset quality improved quite materially for Bank of Baroda. Keep that in mind. Himadri Specialty Chemicals, Pokarna, all of these did really well for themselves. But two stocks, Gurmeet, which cracked. And quick views here, if you would buy either of them. Eicher Motors, circa 18,500. Dish TV, circa 21 rupees.
Neeraj, avoid for now. The reason being that while Eicher looks very, very attractive at these levels, on the two-wheeler side, I would be a buyer in Bajaj Auto. If you see the December numbers, it was the only one which posted about 80-90% volume growth. The KTM technology seems to be coming off, and it has a much more diversified revenue stream if you compare to a Hero MotoCorp or Eicher or TVS. You have domestic units, you have exports, And the kind of work they have done in last 6-7 years in exports, it will take at least 2-3 years for somebody else to, replicate that. Also, a lot of cash on the balance sheet. I will see how the quarterly numbers pan out. Last we saw was almost 26,000 crores. So looks to me very attractive, and it will gain market share. It lost market share from almost 27% to 15% in last 5-6 years. It started gaining it, and I think with the industry going a little in low single digit, this could actually go in double digit and getting some operating leverage. So Bajaj Auto would be the top pick there. Dish TV avoid for now. Let this entire thing, settle around it. Don't just look at the price performance right now.
Right. We've got 30 seconds for pre-open. We're also going to be watching out closely for what the Adani Group stocks do. Yesterday, they saw a pullback. Adani Ports was up about 8%. Whether or not they carry forward the move in today's session is something we'll watch out for. And we'll also watch out for two stocks which have been bearing the brunt of the bears in the market, HEG and Graphite, and to see whether or not today turns out to be any different for them. That's what the Asian market setup looks like. Nikkei is down about 0.5%, and the other two have moved into the green. The SGX Nifty up 0.1%. That's pre-open on your screen, so you're looking to have a positive start. 0.25% higher on the Nifty, with the Sensex showing you a 1% move, but that should come off. Yes Bank is your top gainer. 10%, some truce between the promoters there. You've got the stock at 223, but this will cool off. Axis Bank with its numbers 7% higher. Indiabulls Housing 4.5% higher. Yesterday's session saw a pullback to ICICI Bank. You're going to be expecting a lot from this one too. 3% higher. Grasim is up about 1.3%. HCL Tech post numbers. Not a very big bang move, but still a good percent on the upside. M&M is up 1% too. Z moves up 1%. Maruti is moved up. You've got JSW Steel, which is looking okay. ITC is the other one that has got a move on the upside as well. So it's more positive than negative this morning. Hardly a handful of stocks which are in the red. Some being Reliance Industries is down 0.5%, Hpcl is down 0.5%, Tech Mahindra loses 0.75%, and Bharti Infratel. So IT as a pocket looks slightly weak. Sans HCL Tech, which is holding up well in the session. Axis Bank now up 10%, and Yes Bank 8% higher. Indiabulls Housing continues to see a move on the upside. For the currency, 71.35, so some weakness coming in there on the currency by about 20 odd paise.
Okay. Interesting. Just revisit HCL Tech once yet again. While Axis Bank is the top draw, HCL Tech 2 would be a stock in focus for now, about 1.5%. Bring up Bank of Baroda and see what that is doing in the session today. The numbers seemed good, and that is what gives fuel to the bullish stance that people may want to take on the Nifty Bank, because otherwise the Nifty Bank looks really, really sketchy with the kind of positions that have been built. We'll talk to Chandan Taparia about that as well. Diwan Housing, is it indeed showing that bounce back today after that slam dunk yesterday? For now, seems to be the case. Let's wait and watch. Granules India, about 10 or 11% higher. Bharat Financial, 10% higher. There is strength in Z-Learn today. Wonder what Dish TV is up to. Should bring that one up also for our viewers. And MGL as well as Himadri Specialty Chemicals should come up on your screen, and let's see what those are doing. MGL, no, not too much, precious little really. Himadri Specialty Chemicals about 1.5% higher. So, well, not too much. I think the action seems to be concentrated in the large cap space and not as much in the mid cap space. Actually, Chandan Taparia, come in. What would you do with the say a Bank of Baroda or maybe an ICICI Bank ahead of the numbers?
Yep, looking at the Bank of Baroda first, the stock has seen recovery on the last trading session, and before the trend was continuously falling down because this stock corrected from 125 to 107.8 kind of level. Yesterday it witnessed some recovery and again touched its 50-day exponential moving average. So it has given some sign of reversal, but follow-up is required because on weekly scale it has been forming lower as double lows. So now I need a hold beyond 115. In that scenario, I'll suggest to go long with up move target towards 121 kind of level. So holding above 115 is very important for Bank of Baroda to witness a movement of 4-5% from current level. Talking about the ICICI Bank, this stock was continuously falling down in last 3 weeks. However, on last trading session, it formed an inside bar after the sharp decline on the last trading session. But again, the follow-up is missing. And now I believe that cold writing started to see a 360 strike that is likely to restrict the upside momentum. So expecting limited upside in ICICI Bank, while Bank of Baroda requires a follow beyond 115 to witness an up move towards 120, 121 levels.
Okay. Shrikant, Nifty Bank.
See, like for Nifty Bank, view is that it was around its very important support area yesterday. The entire rise was between 24,400 to 27,500 in this particular up move. And yesterday the Bank Nifty was very close to its important 40% retracement area. At the same time, when there was fall, it was very close to its 200-day simple moving average. And since November 2018, Bank Nifty has never looked back after crossing this 200 DMA. So it was like the first time when the Bank Nifty has retested its important averages. So we are of the view that Bank Nifty should bounce back from current levels at least up to 26,800 or 27,000 in the near term. So maybe next 1 or 2 days of time, we may see the levels of 27 on the higher side, but we cannot forget that it's a pullback move. So we have to trade with a short-term view, and we have to keep stop loss somewhere close to 26,450.
All right, so Diwan Housing Finance had an investor con call. So just some key takeaways from that con call. The company says that all lending done by the company is in line with company policy. Names and parties mentioned in the Cobra post are right, but the way that they have been shown are incorrect. They have mentioned that liquidity situation has been challenging in the last few weeks, but they expect to generate about 4,000 to 5,000 crores in liquidity by selling finance projects. So the initial 9% up move on Diwan Housing Finance is reversed, and now about 3% under. I want to talk about Yes Bank. The stock's at 210 right now, and some positive news coming there. Shrikant, from a trading perspective, Yes Bank has been pretty volatile. It's been moving within the range of 210. It's going down, back down to about 190 odd. Is there a play here within this band, or do you see a decent breakout from here?
Exactly, like 190 acted as a very good support for it in last almost 3-4 weeks. Yesterday also, when there was fall in the market, the stock was very close to those levels and it recovered from those levels. But we are of the view that the stock is still weak. It is finding a lot of difficulties to sustain at higher levels, and we should look for reducing long position if there is any bounce back. So we are expecting 205, 208 as important levels where one should look for reducing long positions. Instead of that, we should focus more on stock like Axis Bank, where the formation is very clear on long-term basis, and on short-term basis we should look for adding long position if it falls to important support areas. Yesterday the stock was very close to its important support area, and from there it recovered. So there we are expecting further more momentum.
Gurmeet, in fact, want to come to you on this particular topic, which is the private sector banks. And when we are putting all these banks into one basket, like an Axis Bank, an ICICI Bank, a Yes Bank, an IndusInd Bank. I mean, up until now, the analyst favorite has been ICICI Bank. But what is your take? Do you feel that this is still worth its money, or probably look at something like an Axis Bank on the back of the earnings that they've done?
See, both, Devina. If you see ICICI Bank, their loan book is almost about $75 billion. So that's about 5.8 lakh crores. That's 6% of the loan share. So now with the kind of crisis we have right now in the NBFC space and some of the banks still under PCA, there'll be a clear market share gain. And if you look at their CASA, that's 50%. Axis yesterday, if you take Axis, their loan share is about 4.6%. So the chance to improve that is far higher. You are coming back to ROEs of 14 to 18% with the kind of focus you have now over next 2 to 3 years. So that will give you a bit of a margin lever. Also, the fact that if you see in last 10 years, the PSU banks loan share has gone down from almost 80% to 67%. So there's still a long way to go. There will also be consolidation there. So if you take a 3 to 5 year view, somebody like an ICICI Axis, which are less 1.5, 2 times book, are bound to obviously get re-rated in terms of the multiple once they get their asset quality issues sorted, and they will increase, grow more than the market. So banking typically grows 1.5 times GDP, and if they can grab market share, they can grow at 15-20%. So in that order it will be. So other than the HDFC and Kotak, which we like, ICICI and Axis, and even I think Bank of Baroda, I was very impressed with the numbers yesterday. Slippages are like 9-quarter low, and if you remove ILFS, it's a 14-quarter low slippage. The loan growth is back to 12-13%. So you will see gain in market share in some of these names.
All right. Got that. Thanks a lot for that, Gurmeet. Appreciate you taking out the time. We're going to leave it at that for this morning. That's Gurmeet Chadha there with his views on the market. Let's bring in Deepak Jasani, Head of Retail Research at HDFC Securities, who's joining us on the show right now. Deepak, what's your sense, the overall mood for the market, and what are you advising clients?
Yeah, good morning. Now, markets have sort of sold off over the last few days ahead of the budget. We also have the derivative expiry. We have some major events coming up over the next few days. Having fallen for such a long period and individual stocks falling even more, we think over the next 1 or 2 days, markets could stabilize, give a little bounce. But I think post-budget, the markets could continue their downtrend. So we are asking clients to sort of raise some cash out of their equity holdings, which can be redeployed at lower levels.
Okay, got that. We're going to come and talk to you in further detail, Deepak, but just 5 minutes away from market opening, and we'll tell our viewers what you need to know to stay ahead in trade today. First up, 4 nifty companies, Indian Oil Corporation, ICICI Bank, Bajaj Auto and NTPC will be reporting their earnings today.
In earnings which came yesterday, HCL Technologies reported strong revenues and deal wins. Management said it will meet the FY19 guidance at the upper end of the range.
A strong quarter from Axis Bank as well. The new CEO has set an 18% medium-term ROE target, adding that the management has embarked on a new conservative growth path.
In other earnings, weak results from Bank of Baroda, Tata Coffee, Keki, while Granules and MGL report a strong set of numbers.
L&T proposes to sell up to 30 lakh shares or 2.89% of its equity stake in L&T Technologies Services. The floor price of 1610 rupees per share is a 6% discount to Tuesday's closing price.
And Diwan Housing in its con call says that allegations in the Cobra Post report are baseless and that the company will take necessary legal action against Cobra Post. Well, from the looks of it, as the pre-open rates have settled down, seems that Granules India will start off as the top draw at the broader end of the spectrum, and at the large cap end, it will be Yes Bank and Axis, and actually even HCL Tech, which are likely doing well. So now viewers know the reasons why these stocks are doing what they're doing. The stock that we haven't quite discussed technically, and maybe in detail fundamentally we discussed with Gurmeet, is Bajaj Finance. After the 2% uptick yesterday, it adds another 2.5% in today's session, buoyed naturally by the kind of quarter that it posted and the resultant reaction thereof. Deepak Jasani, would you recommend your retail clients to go out and make a fresh investment into a Bajaj Finance?
Bajaj Finance remains one of the most expensive finance companies, although the quality of the management, the processes, the internal processes are world class. But I think everything is good at a price, so we would suggest the investors to wait out a bit till the stock falls to some attractive levels.
Okay, what would those attractive levels be, Deepak?
I think around 12 to 15% lower from here.
Okay, so Deepak is playing with caution, doesn't want to buy a stock which is too expensive. What about the trading momentum out here, Chandan, Taparia, Bajaj Finance? Would you believe that there could be more upsides here?
Yes, after a volatile swing of last 2 trading sessions, stock has recovered well from the lower levels. It has again reclaimed its 50-day exponential moving average, and the way it has recovered from the lower levels with the volume, some uptick could be seen. So as of now, expecting it to move towards 26.25 to 26.45 kind of zone.
Okay, well, that's the view on these names as well. 3 minutes to go. Granules India starting off as the top draw. Deepak Jasani, just wondering if your team has coverage on Granules India, the numbers seem reasonably okay.
No, we don't cover that stock, unfortunately.
Okay, fair call. But the stock is starting off really well. Any thoughts on MGL or Mahanagar Gas? Is that within coverage?
Yeah, the gas companies are within our coverage, and I think there is a long-term structural story out there. Mahanagar Gas came out with good numbers yesterday, so one can remain invested in those stocks. They are the pure defensives in volatile markets. I think they are better defensives than most other defensive sectors.
Okay, so within the oil and within the gas space, these stocks are the defensive bet, according to Deepak. We have a minute to go from market opening, and for the index, we're up about 0.5%. Stocks have stabilized. Your top gainer is still Yes Bank. Let's take some top calls from our technical experts for the morning. We'll start off with you, Shrikant. What are you recommending?
Devin, I would like to go with Hindustan Lever because there I'm very much comfortable because the stock has corrected to its important support area. At the same time, there was recovery, reversal formation, and stock is very close to its breakout level of 1770. So we are expecting stock to move towards 1800. It's a decent bet. We are expecting pullback in the market. So it's a buy at current price with a final stop loss at 1740.
Chandan, what about you?
Yeah, we'll continue to be with Dr. Reddy. The stock is finding multiple support at the lower zone. Taken support at its 50-day exponential moving average. Weekly chart stands positive, signifies. So expecting positive momentum in the Dr. Reddy.
Okay, gentlemen, stay on. So much more to talk about. The trade about to get started, and we'll show a bounce which started somewhere in the last 20 minutes of trade yesterday. Buoyed, no doubt, by good results. In fact, all the result buoys will react positively if the pre-open rates are to be believed. Hard to be believed. 0.5% higher, in fact more than 0.5% higher. The Nifty Bank, great buoyancy out here. I believe Axis, BOB and some of the NBFCs will be showing their hand out here. So the financial space essentially, not just the Nifty Bank. Mid caps and the small caps very quickly. I want to go to the heat map very, very quickly. Starting off well. Let's get the heat map up and let's focus on the gainers for a bit today. We'll have Axis, HCL Technologies, Indiabulls Housing, Yes Bank, ICICI Bank ahead of the numbers, and Bajaj Finance. Look at that. It's dominated by financials. The top 6, 5 out of the top 6 are financial names. You have an HCL Tech wedged in between because extremely good set of numbers and more importantly, very positive commentary, which is leading to this stock do well. Z Entertainment is showing signs of a bounce as well, so good going. And Bajaj Finserv, in part by not really by the numbers but by virtue of what Bajaj Finance is doing, I presume Bajaj Finserv too is inching up in the session. So strong moves for the financials in the early morning session. Market breadth on the Nifty marginally positive. I think broader market breadth too should be reasonably okay. Just take a look at the losers. Not so much of a bounce back for the Adani Group stocks. I'll tell you what's a worry though. The HDFC Twins and Reliance, which were looking wobbly in trade yesterday, and the HDFC Twins look wobbly in trade today as well. So both HDFC and HDFC Bank have corrected about 1%. So those stocks are just chipping off a little bit. The high beta names in the financial space are moving up. These two are coming off. Axis Bank, clearly the man of the match, 5% higher, and followed closely by HCL Tech, which is up about 4%. So strong start to the result boys. The index though is not at the highest point. Within the first two minutes itself, it's come off a little bit. Bring up a couple of trend makers before I hand it over to Devina. Firstly, some results that came out at the broader end of the spectrum. Himadri, Pokarna, and a couple of others. I think some of the numbers were reasonably okay. BOB in particular, but Pokarna too, very strong quarter, and that stock is starting off about 4.5% higher. BOB though about 3% too. Very liquid name, doing rather well for themselves itself. And yesterday's top movers, 2 losers and 1 gainer. Let's see what they are doing today. Dish TV bounces back a little bit. DHFL though continues to slide lower, another 7.5% gone, very volatile, but continues to slide lower. Praj, after that 15% up move yesterday, up another 2% in trade today. Devina.
More earnings reactions then, and smaller ones. You've got Hawkins that reported its numbers. Net profits remain flat, so there was no increment there. EBITDA was up marginally by about 3.7% to see whether the stock has reacted or no. Aside from that, you had the likes of a Bank of Baroda, Bharat Financial Inclusion that reported numbers, Granules that reported its numbers. Net profit were up 72% at 60.3 odd crores. Its stocks up about 4%. 2 stocks that I'm very interested to see and how they've opened up for trade is going to be HEG and Graphite India. The stocks yesterday, in fact, HEG was down 10% on lower circuit in yesterday's session. Today has recovered a bit, and so has Graphite. About 2% for HEG, 4% for Graphite India. Taking a look at the other movers, you've got the likes of an Indiabulls Ventures, which is up about 3.8%. Adani Power has moved up 3% as well. DCM Shriram 3% on the stock. Bank of Baroda, we already highlighted that in terms of its results and the way that's moved. Network 18 has moved up. Ashoka Buildcon at 122, Exide at 202 is up about 1.24%. Then you've got the likes of a Vijaya Bank, which is not doing all that badly. Welspun Corp, Petronet LNG, Suven Life is up 2%. VIP Industries is also up about 2% in the session. Amongst some of the losers, just to quickly highlight that as well. So while Diwan Housing Finance is still down about 6.5%, Godrej Consumer Products is down 4%. You've got an L&T Tech which has moved lower as well, 2.8%. Tata Coffee has moved lower, and Jet Airways continues its grind, so about 1.5% lost out on Jet Airways.
Well, so that's the sum and substance of the opening, at least. Axis Bank, the man of the match. HCL Tech, actually the man of the match, 4.5% higher. I know that Shrikant recommended that you could switch out of HCL Tech into some of the other names. I want to get Chandan Taparia's views on this one. After this 4.5% move, Chandan, is there something that can be done in HCL Tech for somebody who has a previous position, or for somebody who doesn't have any position?
Yeah, Nifty IT is doing well from last couple of trading sessions, even after the decline in the market. We have positive view on the TCS, HCL Tech, Tech Mahindra, Wipro, and most of these stocks are likely to hold the gains. After the result, the stock has seen the strong momentum by 4% and believe that this up move could be hold. So those who are holding suggested to keep the trail stop loss of 1005, or those who are interested to go long can buy on a small dip by putting the same stop loss to play the upside momentum towards 1060-65 levels.
Okay. Shrikant, last 2 days, the HDFC twins have looked slightly weak, starting off about 1% lower today as well. While you're bullish on the Nifty Bank, what's the view on these two?
See, for HDFC Bank and HDFC Limited, formation is very clear that they are finding a lot of resistance at higher levels. In fact, they have formed multi-top sort of formation on daily basis, which is negative for them. At the same time, the way they have fallen, like HDFC Bank, which was around 2160, 2170 levels, now it is very close to its important support and psychological area of 2000. So between 2000 2020, certainly we should look for adding HDFC Bank to our portfolio, because we are expecting market to remain in a range at least ahead of this interim budget. So we are expecting market to rebound to the levels of 10,770, 750, Bank Nifty close to 27,000. So it's a buy between 2020, 2000 sort of levels. For HDFC Limited, again, the view is same. And here we are expecting further more weakness, but close to 1900, it has very good support, because it's a support of retracement as well as it's a support of 200-day simple moving average. So we are expecting rebound in the short term in both the companies.
All right, gentlemen, we'll leave it at that. Chandan as well as Shrikant, appreciate both of you taking out the time this morning and sharing your ideas with us here on the show. Deepak Jasani is still here with us. Deepak, while obviously the focus continues to remain on earnings, and most of it, we're in the midst of it right now. So what have you made out in terms of the Nifty earnings that have come out so far? We've seen more meets this time around from the Nifty 50 companies.
Earnings again this time have been mixed. Basically, IT, some banks, some finance companies, media, a few metal companies and FMCG companies have reported good numbers. On the other hand, a lot of other sectors have reported average to slightly poor numbers. So, like in all other quarters, this quarter is also mixed kind of numbers, and I don't think people are going to get excited to up the earnings estimates for Nifty based on these numbers.
Okay. What is, what's the most immediate trigger that you're seeing for the markets right now? Obviously, you've got the interim budget on Friday, but what are you factoring in? Do you expect anything path-breaking to come out?
No, we believe that interim budgets are typically non-events. So, although a lot of hype and expectations have been built up around the budget, we don't think anything substantial will come out, except maybe some increase in the tax exemption limits and a vision statement on how the government is planning to correct the farm distress as well as the employment generation. So, these two things. So, a lot of statements and speeches on that side, and one or two tinkering with the direct taxes. Indirect taxes, of course, there's not much to tinker.
So nothing much from a market standpoint, at least. Within the NBFC pocket now that we've seen the bigger numbers come out, are things starting to look slightly better, or they continue to remain challenges in the path of growth for most of these names? And I'm not talking about the bigger ones, I'm talking about the smaller names and what you expect thereof.
Yeah, there we would like to sort of differentiate between companies with pedigree, with known corporate governance cultures, and the others which have been set up over the last 5-7 years, and where the promoter's credibility is not so well known or well appreciated. So the first bucket, I think, finance is easily available, there is enough demand for credit, and NPAs are under control typically. So there, I think if the stocks have been beaten down more than necessary, then there is a good chance of their recovering fast. But the second bucket, I think one will have to be very cautious because the worst may not be over. A lot of these companies may not see any growth in AUM over the next year. Their NIMs could shrink a little bit. Their NPAs could rise. So we'll have to be a little stock specific in the NBFC, in the finance company space.
Are you a buyer in HCL Technologies?
Yeah, our institutional team has a buy on the company.
Post the results,
and they are excited by. Yeah, they are excited by the numbers. Basically, they are excited by the organic growth sort of resurgence which has been seen in this quarter.
Okay, and maybe that's what's showing in the stock as well. Would you prefer an Axis and an ICICI Bank over a Kotak and an IndusInd Bank currently?
A lot will depend on the risk profile of the investors. If one is willing to sort of bet for higher returns and taking a slightly higher risk, then yes, of course, the two names that you mentioned are worthy to taking bet on. But if you think the markets are not going to perform or they are going to fall from here, then probably the other two names may fall a little less because there's a lot of expectation and hype is built into the first two names. Of course, Axis has come out with very good numbers yesterday, and we are seeing the result of that in terms of the stock price reaction. So a lot will depend on the risk profile of the investors. You will get a higher return in the first two stocks definitely, but the risk would also be higher.
Okay. Any thoughts on Godrej Consumer? That stock is now topping the list of losers. The numbers came out yesterday. Yes, they were slightly wobbly, but there is a very sharp and pronounced reaction this morning.
Yeah, we don't actively cover that stock, but I think broadly because they are present in so many countries across the globe, they are getting hit quarter after quarter because of the currency, because of the economic conditions in various countries and such like. And even in India, they are not so widespread in terms of the products that they cater to. So that is why they are slaughtered. The stock may consolidate for some more time before inching upwards.
Okay. The other one which has gained the last couple of days, Deepak, is Persistent Systems, not on the back of the results, but on the back of the buyback. Is that on a valuation front, it is okay, but from a business perspective or from a stock perspective, would you be a buyer or would you prefer some other mid-cap IT name?
Although our institutional team has a buy on the stock, but I think the stock has underperformed. The business model is still not aligned to the current business conditions or the demand drivers. So I think it could sort of underperform a bit as compared to the other mid-cap ITs.
What do you call an emphasis? I mean, the stock currently is trading around 1,000. The buyback happened at steeper prices of about 1250 odd. Do you believe it has the potential?
Emphasis has been given high valuation because a lot of brokerages feel that FY21 there will be a big jump in their earnings based on whatever initiatives they have taken over the last year or so. Now, all depends on whether those kind of numbers are achievable or not achievable. So if you believe that, then probably the stock is a buy. If you are skeptical, then probably the stock could run up another 60-70 rupees from here and then stagnate or consolidate.
All right, that's the mid-cap IT space. Within the auto pack, Deepak, whether it be two-wheelers, whether it be passenger vehicles, and some commentary that came in from the management of escorts, where they have actually reduced their guidance. Was that a sore spot? Was that a concern? Or, the fact that they also said that things will start looking better starting quarter one of FY20, that was the main highlight.
Yeah, auto space, we have been sort of going a bit light over the last 2 or 3 months, and we continue to feel that they have not reached trough in terms of their offtake numbers or growth numbers. So whether it is the car manufacturers or CV, because the whole sector, especially the CV sector, has seen a 5-year outperformance. The cars have also done well over the last 2.5 or 3 years. Two-wheelers have not done too well, but the base is so big that probably from here growing in double digits or continuously is a bit of a stretch. So in that sense, auto and banks have traditionally been high beta sectors, but because of the high base in the various sub-segments of auto, I think it will be difficult for them to grow in double digits or even high single digits over the next few months. So till that time, probably the whole sector will underperform.
What's the expectation from Bajaj Auto, Deepak?
I don't have the numbers offhand, but I think the company will report good volume numbers, but I think at the profitability level, there will be some challenges.
Mm-hmm. Okay. Were you surprised by the margin squeeze of Maruti?
A part of it was expected in the sense that the way the whole car industry was giving discounts in December due to the stockpiling post the festival season, which was dull. Part of it was known and discounted, and but I think the margin squeeze was a little more than what the whole street expected.
All right, got that. We'll leave it at that, Deepak. Thanks so very much for joining and appreciate you taking out the time. Deepak Jasani there with his market opinion. We're still 0.5% higher on the indices, so not a bad start going in for the Nifty, as well as the banks are doing okay. So it's 0.7% higher for the bank Nifty at 26,759.
Well, let's take a break. On the other side of the break, we decode the quarterly numbers of TeamLease. The Managing Director Ashok Reddy joins in next, and then get a sense of whether the NBFC sector is getting over or has gotten over the liquidity crunch. Digant, Haria of Antique Stock Broking would be joining in.
$18,500 गांवों में 1000 दिन के अंदर बिजली पहुंचे, ये काम पूरा करके दिया जाए।
केंद्र में मोदी सरकार और राज्य में देवेंद्र सरकार आई, में हजारों लोगों ने आत्महत्या की है और दूध का जो रेट पहले मिलता था पुरानी सरकार में उससे भी कम हो गया है।
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back to Indian Open right here on Bloomberg Quinn. Good day for the markets and they are trading higher in trade. Let's bring up corporate conversations. Firstly, TeamLease, which saw its bottom line rise more than 30% in the last 3 months of 2018. The recruitment and training company also managed to post better margins. The only concern would be on realization per associate per month, which saw a marginal dip. So will that trend change, or is this a conscious decision from the management to let it cool at the expense of getting in growth? Joining us right now to talk about that in greater detail is the company's managing director, Ashok Reddy. Ashok, good having you. Thanks much for joining in. Sum up the quarter for us. It seems like you've taken a call to be game for large deals, even if it comes at that per associate per month number looking slightly lower.
So I think that's more than complemented for us on the other side by reduced funding exposure. So while we were funding about 22% of our client base, that's now come down to about 15%. So I think that coupled with the productivity increases that we are able to show, from our 240 associates to a core employee last quarter, we've improved that to 260. Our belief is that these two will more than offset the aspect of a reduction in a per associate per month realization. While it's not a conscious strategy to reduce it, I think we will continue to strive for higher realizations. Certain mandates that have come at a fixed rate and a large volume have kind of depressed that realization, but I think we're still good to go from a perspective of scale, productivity, lower funding exposure, and playing to more profits in the long run.
Okay. Would that be a constant factor? I'm just trying to gauge if the industry is shifting that way, that every quarter you would have a mix of some large contracts that come in, which by virtue of them being large, the clients would probably ask for a better tick or a better ticket, and therefore the margins would be a bit lower there.
So the pricing has always been very client specific. There's no rack rate in staffing in that sense. So depending on volumes, depending on the profiles that we are catering to, depending on what the customer is looking for as a service offering, the price gets decided accordingly. And I think if you look at it for the last 1 year, our price point as an average, whether it is a markup model, which is a fixed rate, or a variable realization, has not changed that much. That's kind of stayed constant. I think what has changed is growth in clients that drive the fixed markup have gone up substantially, and that's kind of pulled down the average PAPM. But I think on a recurring continuous basis, we are seeing the market being quite positive in terms of growth and open positions and numbers that clients are projecting. And our belief is at this point in time where we have large productivity gains, taking on mandates that play to economies of scale is still worth going for.
Interesting. Okay, now, if I just look at your revenue growth numbers, after, closer to the third quarter of FY18, when there was a sequential dip seen for 2-3 quarters in a row, I think the last 5 quarters have been quite strong. You've done at least 20%, this quarter about 28%, so which is very strong. What's the trajectory looking like?
So I think last year, in the first 2 quarters, we did have a relatively soft aspect around associate growth. We've been quite healthy this year on associate growth numbers. Effective this quarter, we've actually crossed 210,000 employee trainees on board. And I think the trajectory for the current year itself has been an increase of over 30,000 employees on rolls. So I think that element of growth will support and sustain the element of the revenue growth at the top line. And our belief is that even for Q4, there is a healthy pipeline and demand from customers, and we will be working on that to further feed the element of associate growth and the top line growth.
On a relative basis, I'm just thinking, and again, sequential might not be the right way to look, but I'm just looking at numbers. General staffing on a quarter-on-quarter basis grew really well. Specialized staffing on a quarter-on-quarter basis slightly muted, but you've had the Evol acquisition as well, which is aiding that. How do the next 2 or 3 quarters shape up for specialized staffing?
So I think in IT staffing, we are seeing clear demand, and I think we have actually added about 130 resources in the last quarter. We are even ramping up our core team, given the new client acquisitions that we have and some additional demand that we are seeing from customers. So I think the IT staffing business, both on terms of growth and margins, is well placed. The evolved IT, the telecom staffing business, the core which has been there historically is healthy. We have been doing a little trial and error in certain new mandates. That's an investment phase from a new leadership and from a market trajectory point. I think we will take another 2 quarters to settle that element of a trial and error. But thereafter, our belief is that the market in the telecom side is also looking healthy, and we will be able to build the volumes and sustain the margins.
So is there I'm guessing there would have been a conscious decision. I don't have a handle there, but I just wanted to know, if I look at the last 6 or 7 or 8 quarters maybe, from a larger revenue share of 96% which general staffing had, you're now at 88% because others have grown. What's the in-house conscious breakup that you target to reach over the next 12 months?
So our belief is that the general staffing business will still be the key driver for the top line growth of TeamLease, while the other P&Ls, which are into the HR services, which are into employability, ease of doing business and stuff, have started scaling up and will contribute to the revenues. But I think where the other businesses will contribute in a larger manner is largely on the bottom line margins. Historically, they were also at around a 96 and a 4% kind of a split. That will be changing to about a 60-40 in the current year. So I think the other specialized staffing businesses, the training businesses, and other initiatives that we are kind of driving are larger margin businesses, while the top lines will not anyway be near the general staffing volume business. But our belief is that they will aid the profitability and margin growth as they have over the past many quarters into the next 2 years.
Okay, last couple of questions, and both of them are more outward looking, not necessarily just the next 4 quarters. But I remember 2 or 3 quarters ago when your EBITDA margins hit, I think, 2.3% or thereabouts. A lot of people got pretty excited that this is what they were wanting to see, that in this business, a leader like you taking the margins higher. From there, we've been circa this 2.1% range for the last 2 or 3 quarters. What's the outlook like? I mean, would the business and the very nature of the business mean that the margins will remain 2.1, 2.2, 2.3%? Or do you strive to take them higher? Is it possible to take them substantially higher?
So if you really look at it, I think 2 elements that we effectively have been saying over the last 2-3 years is, one, we are a growth opportunity. The headroom for growth in all our businesses is quite large, and we'll continue to invest in getting that growth. By virtue of that growth, economies of scale come to play in the volume staffing side. And we have the non-volume staffing P&Ls that are also growing, which are higher margin businesses. A combination of these two effectively drive the element of the margin improvement. So in the last 2.5 years, we've taken the margin from a 0.9% to a 2.2% at this point in time. Even if you do a 9-month comparison, it's at a EBITDA level, it's moved from a 1.7 to a 2.1%. So our belief is that as volumes happen, as the other P&Ls and the specialized staffing businesses come into play in a larger way, the margin improvement story can continue to play out. And that's going to be a key focus area for us. Obviously, there are times where there is a step-up investment, whether in technology or whether in people that happens, but that will kind of slow down that margin growth in periods. But in a longer view, when we look at it, I think the global standards for staffing companies of 3.5% is very achievable in the Indian scenario also as we go forward.
Fair call. We'll leave it at that. Thank you so much for taking the time out and being with us today and speaking to us. All the best for the quarters ahead.
Thank you very much.
Right. That's TeamLease. Hopeful of better margins, but more importantly, focus on growth in the near to the medium term. The growth numbers looked fairly okay thus far in this quarter. The stock just a bit soft in the session today. But what's active is the other side of the market, NBFCs.
Yeah, that's going to be our focus now. The country's largest NBFC delivered a rude shock in the third quarter. IL&FS collapse caused a ripple effect in the entire space with concerns around liquidity. This in turn has prompted some non-banking lenders to hold back from large disbursements. But does the sector have the wherewithal to survive this onslaught? And did this rude shock create the perfect opportunity for lenders to introspect and set their house in order? Joining us right now to talk about all of this and more is someone who tracks the sector very closely, Digant Haria of Antique Broking. Digant, thanks very much for taking out the time. So, just put it into perspective for us. While obviously we know that the sector is going through challenges and stresses of its own, so far with quarter three on its way, have things changed meaningfully with the kind of numbers that you've seen? And obviously there is a big difference between the numbers of the larger names, the more strong stable names versus the smaller ones.
Yeah, so when this when this entire IL&FS crisis broke and we had this liquidity freeze in the month of October, that time there was an intuition, or there was a belief that in a few months at least the good ones would get back to normalcy and the not so good ones will probably never get back to normalcy. So that was the feeling then. Now we are 2 months, 3 months into this crisis. We have already seen what Q3 could deliver for a lot of them. So as it emerges, there are 3 different worlds within the NBFC space. So the first is the large AAA rated and companies who are backed by good parent and strong business models. I think for them the liquidity is absolutely back to normal. So the companies which come in this category are the usual suspects, the Hdfcs of the world, the Bajaj Finance, or to some extent L&T Finance. Then in small ticket lenders you would have people like Muthoot Finance or Manappuram who come in this category. So I think these are the ones who are not facing liquidity challenges whatsoever. So they are able to borrow from the bond market, from the NCD market, from the banks. Maybe yes, the cost of borrowing may have gone up by 20, 30, 40 bips depending upon what is the main source of borrowing for each of them. But liquidity, we can safely say that that challenge is over for this first category of NBFCs. Then there is a second category of NBFCs where the markets, the banks and the bond fund managers are a little confused that whether these businesses will they be able to bounce back, or will they not suffer from any kind of crisis in the future. And then we have the third set, which will be companies which are definitely under a lot of pressure, and for them bouncing back to the old glory days look like a very, very distant dream. So yeah, that's coming more and more clear. So yeah, the first category results which were good were Muthoot Capital, which does two-wheeler financing, was very strong. Bajaj Finance was exceptionally strong. HDFC, we saw that despite whatever happened, it was a reasonably decent quarter. And in this second category, I think some companies which come would be companies like a PNB Housing, which have a good credit rating, but the margins are under a bit of pressure. Maybe LIC will also come under this second category, that liquidity may not be an issue for them, but yeah, they will still face some earnings pressure.
Let's talk about some of these housing finance companies now. Most of them have gone and taken the route of securitization, and securitization in fact has been at its peak in the first 9 months of FY19 if you were to combine even 2017 and 2018 put together. While the larger ones, like you say in your note, are expected to grow well, there will still be margin pressure. You want to highlight that in a bit more detail for us?
Yeah, so we came out with our note also in October 2018 that housing finance and wholesale finance are the two most vulnerable pockets. See, because these are very, very thin margin businesses, and when your borrowing costs go up in a very short duration, it takes a lot of time for your ALMs to adjust, for you to pass on those costs to your borrowers. And because there is always so much competition, you cannot pass on the complete borrowing cost to your customers. So as we saw, HDFC also had some bit of margin pressure, but if you look at the reported earnings, the margin pressure does not come, it's not very obvious because they do a lot of these direct assignments. And this route under the Ind AS and especially after this ILFS crisis has become very popular. We have almost seen 90,000 crores worth of securitization or direct assignments happening. Some of it is obviously because government has asked a lot of these PSU banks also to help NBFCs with the liquidity, and some of it is because the banks see this as a chance to get good assets at good rate. So I think margin pressure is clearly there, and I think markets will be gentle to the companies which only have margin pressures. So companies like PNB Housing and HDFC, they had margin pressures, but asset quality was fine, liquidity was fine. So maybe another 1 or 2 quarters of adjustment and life will come back to normalcy. But then there will be some smaller companies which may not be able to really do well. Someone like maybe a Reliance Home Finance or a Repco Home Finance, they will take a lot more time to adjust because the liquidity for them is also not as easy to come as it is for the big boys like PNB or your HDFC Limited.
Let's talk about cost of funding.
And there is a third category, companies like Diwan and IndiaBulls.
Yeah. Sure, go ahead, make your point.
Yeah, so cost of funding for all is, so what I'm saying is the third category is Diwan and the likes of Diwan and IndiaBulls who are struggling on liabilities, margins and asset quality, all the three fronts. So I think the battle for them is longer. The battle for HDFC and PNB Housing will probably end in a quarter or two. And the guys like Reliance Home Finance, somebody who's in the second category, I think the battle will be longer than the first but shorter than the second. So that's about it. And I think borrowing costs have gone up for everyone, but it's coming back. It's coming back to normalcy. For example, HDFC could raise 1,000 crores in 3-month paper at 7.35% last week. That's almost back to pre-crisis levels. So maybe 10, 20, 25 bips hike for AAA rated players, around 35 bips hike for AA, and around 50 bips hike for others is what we'll have to live with as a system. And that will make them slightly, lower in terms of profitability and lower in terms of market competition because the banks are not facing an equally sharp rise in borrowing costs.
Right. So, while you already highlighted HDFC, Bajaj Finance for themselves have seen about 8.2%. But the difference between some of these names versus, the likes of the smaller ones like an Edelweiss, it's pretty divergent from 8 to 11.5%. You think that there is a chance of, some amount of cannibalization and these bigger companies taking away market share now?
Yes, absolutely. I think we are already seeing that. For example, DHFL did not disburse, Diwan Housing did not disburse anything in the third quarter. Their loan book did not grow. So somebody has taken up that market share, right? So maybe HDFC was cautious this quarter, Group Finance was cautious, But I think now the environment is starting to get a little better. The fear is much lower than what it was in October. So maybe in the coming quarters, you would see that those guys who can access funds at good cost, I think they will gain a market share. Bajaj Finance also did not gain market share. They just did what they were supposed to do. And I think next 2 quarters onwards, they will start, they will increase their aggression, or maybe they will try and capture some more market share. So that is happening, like the first category of NBFCs will clearly be much stronger in times to come. The last category of NBFCs will struggle to come back to normalcy. That is what we think is panning out.
Just one last question before we let you go, and this is from the vehicle finance point of view. And the market itself is a bit subdued, be it two-wheelers, be it four-wheelers. Disbursements, do you feel will take a temporary hit, or probably to be slightly more prolonged?
See, I will just look at these two products. Okay, two-wheeler finance and commercial vehicle finance have very different dynamics. Okay, so two-wheeler financing, the penetration is very low. The penetration is as low as 35%. So out of every 100 two-wheelers sold, only 35 are getting sold. Now, because the price of two-wheeler has increased so sharply, I think financiers will have a very big role to play in the coming times, because it's after 10 years that prices have gone up in double digits. So I think two-wheeler financing as a product will do very well, even if we don't see very good growth in two-wheeler. So we are very positive on that space. Muthoot Capital is one of the companies which operate in that space. When it comes to commercial vehicle finance, the market is little slow, but we just feel that the slowdown will not be as acute as we saw it in 2013-14. And see, two-wheeler financiers like Cholamandalam or Shriram Transport, they have a very big portfolio. Like they do cars, they do MUVs, they do LCVs, SCVs, used CVs, new MHCVs. So if the CV sales are slow, definitely these companies will slow down, but not to the same extent. For example, if an Ashok Leyland has a 0% growth, I think Cholamandalam can still end up doing a 12 to 15% kind of growth because of the diversified portfolio and used CVs. Used CV is a market which will never go very fast or very slow. It will go at its own natural 10 to 12% kind of rate. So I think two-wheeler, this CV financials also present an opportunity to the investors, because the correction has been sharp, and we believe that the growth and margins may not collapse in a way that the stock prices are trying to tell us. So yeah, maybe this is one space where stock price falling could be an opportunity. So yeah, that's our take. And there is one more sector, gold finance, which we are the most positive on. So I think that sector has not reported numbers, but at least we know that liquidity crisis is over for that sector. There is absolutely no dearth of liquidity for that sector.
All right, got that. Digant, thanks very much for joining in. Really appreciate you taking out the time and sharing your thoughts with us here on the platform. That's Digant Haria of Antique Broking talking about the NBFC space at large. Well,
Thanks, Devina.
Yeah.
It's banks all the way. Axis Bank is 4.5, ICICI Bank 3.5, HCL Tech is number 5, and Bajaj Finance has climbed out to being one of the top performers, number 4. Yes Bank are out there too. So it's financials leading the charge today, and showing in the way the dichotomy between the indices, right? Nifty Bank up 0.7%. The Nifty is just up about 0.23%.
Yeah, we'll see how the rest of the day shapes up. But more market action continues on the other side on the F&O show. It's a goodbye from Neeraj, myself, and the entire team. Thank you for watching.